All right, what's going on? Juno the vibes. I've been meaning to just make a video of like what I actually look for, and it's been multiple strategies that I recorded to even share with others. But I think this one is the most valuable that you would get out of all the videos that I have recorded in the past, but probably never released to anyone. But I think I'm very comfortable in releasing this to the public, people that's interested in trading. So if that's you, looking to make something extra on the side than your normal 9 to 5, cool. Um, This one is not even strictly for Forex or futures. I've been lately in the futures market, which is a lot of volatility, very good movement. Forex, I still dabble in that with Forex. Still volume over there. And I just know people also do options. All three of those, you'll be able to see this strategy, the steps, the rules that I am actually going to show you today to help maybe add to your trading style or your strategy. I'm not saying to take all this and mimic me, um, but I just really see myself as a result really coming in. Sometimes I might not have, they're not 100%, this is not 100% trading. Maybe if you add in whatever you have already know about trading along with this, maybe it could increase your percentage of win. But there's always losses in this trading game. So I'm gonna go ahead and get right into it. Just wanted to give that little introduction. Again, this is Juno the Vibes. Um, First, just want to do a psychology check, mindset, what we should be thinking and how we should be accountable when we go into trading. Patience is key, and a discipline is a must when we trade. Those two things is the most important things that I have actually experienced through this whole trading thing. You don't want to chase trades. Discipline in regards to that is if you don't see the setup, your one key setup for life. If you don't see that, there's no trade for you. You don't need to trade every day. That's I think what got caught up with me in my earlier stages when trading. But that was just that little nothing more. That's just straightforward for me. I'm not trying to even rant on this call that much, not call, but just this video. Um, I want to get right into it. So times when to trade. Let's because time is always going to be first thing when it comes to trading. Always. Then we think about price. It's always time and price. Now, when times to trade, we're going to look at here 7 a.m. to 11 a.m. This is for Forex. Now, I know the stock market that opens at 9:30, so keep that in mind. For StockX, not StockX, for stock market, you want to go ahead and trade from anywhere from 9:30, which is the opening bell, up until 11:30 latest, just before lunch. Then you want to pick back up around 1:30 p.m., which is the afternoon session, to 4 p.m. Now, 2 a.m. to 5 a.m. is where only Forex. So Forex, this only applies to Forex. Now, it also applies to futures too. You can trade that market overnight, but stock market, no. Stock market is only from the 9:30 opening bell to 11:30. Then we have the lunch, 12 to 1. Then we pick back up at 1:30 to 4, just before the market close. So here's all the time. Go ahead. I would screenshot all of this. I'm going to go through all of this, but I would just go ahead and screenshot this. Keep this in your notes. All that good stuff. Again, 1:30 p.m. to 4 p.m. is also key to Forex and futures in the stock market. Okay, 7 a.m. That starts your morning session for Forex and indices. Indices normally tend to actually get a little volume at 8:30 to 11:30, but you can also start looking at indices and futures around 7 a.m. as well. But ideally, you want to look at 8:30 to 11:30 for the futures and indices. Forex, just want to say 7 a.m. to 11 a.m. But if you just want to go ahead and just put all this together and just say, all right, I'll even say this. So just start looking at 7 a.m. to 11:30 for Forex, indices, and futures. For stock market, you want to look at 9:30 to 11:30 for the morning. That's the morning session. This is the morning session here. 2 a.m. to 5 a.m. That's overnight. That's what we call a London session. That's only markets that really trade overnight, which is stock market. Stock market actually trades overnight too, but you don't trade. I'm only talking about times to trade. So times to trade is 2 a.m. to 5 a.m. for Forex and futures market, not the stock market. 1:30 p.m. to 4 p.m., which is the afternoon session after lunch. That can apply to all markets. All right. And just real quick before I even go on, down here, I'll use TradingView. TradingView.com. That's how I chart up my charts, my market. That's how I look and get my analysis. Then I go into whatever broker or platform and trade. But here I wanted to show you is you want to come down here to your right. See where this timer is? Come down here to your right. We always want to have this on the New York time. It doesn't matter who this video comes across of, but always want to set this to New York time. That's just how all this is going to just fall along and align with everything I'm saying. Okay, next over we have key time levels to look out for. Now, when I say key time levels, I'm talking about highs and lows. Okay, I'm looking at these specific times, so that means like I'm looking at from 1:30 p.m. to 1:30 p.m. to 4 p.m. highs and lows. I'm looking at what's the highest and the lowest from that session. Okay, I'm gonna go over. This is the p.m. session, afternoon session. Okay, then I have this here, 9 a.m. to 12 p.m. That's just before lunch. That is our morning session. I'm looking at key. I'm looking at the high and the low out of that time frame session. Okay, London overnight. Again, looking at the highest high and the lowest low within that time frame. Lunch hour. Again, looking at the high and the low, the highest high and the lowest low from these times. Okay? All right. Hope that's pretty much straightforward. Rules. Get into it now. This is where we actually get into it. So rules. What I'm looking for is I'm waiting for a key time level. Remember, I already told you the key time levels to look for, the highs and lows. I'm looking for a key time level to be swept or taken out. Okay? I'm gonna show you what that looks like in the chart. After that, I'm waiting for a market structure shift. I'll also show you that too. Okay? Now wait for retracement inside a efficiency or an imbalance or a key Fibonacci level. And I'm also going to show you that too. So actually, what I'm going to go here, since we left on here, the key Fibonacci level. If you guys want to go ahead and just take a look here. 1 second for the key Fibonacci levels. Okay. You can go ahead and take a look at that. I'm going to leave that up for couple minutes. You can pause this video, screenshot this so you know you have this. Okay, I'm gonna take that down. I'm also just gonna give you this here. Go ahead and screenshot this or pause the video so you can get this down, put this down into your Fibonacci tool, which over here to the left right here, Fibonacci retracement. That's where you want to click on that. Bring that down, get your settings. That's how you get your settings. So I'm gonna leave this up for a little bit too. Okay, go ahead and pause the screen, the video I mean, and screenshot it. And all right, okay, now got that there. Market structure shift. I'm gonna give you a little bit, but I'm also going to show you. Market structure shift is pretty much this. All right, so this is an uptrend, right? What I'm looking for is this low right here. Just after we broke this high, and this being the highest high, I'm looking for this low to be taken out. Just like that. Okay? And as I'm waiting for, I said wait for a retracement, I'm waiting for us to do something like this. Then, bam. This right here, once this takes out this low right here, it could be a wick or a candle close above, below this low. This is now a market structure shift. This is a market structure shift. I'm waiting after that, after we take this out, a wick or a candle close. Once we take this low out, I'm waiting for this to come up into a efficiency, which is an imbalance. I'll show you that. Or the key Fibonacci level, which is a 0.618 and 0.79. I will also show you that. But I'm waiting for that to happen on a downtrend, just vice versa. Okay. I'm waiting for this high to be taken out before I even consider this be a market structure shift, because it was in a downtrend. So I'm waiting for this to happen, come down, pump up. That's what I'm waiting for. Market structure shift. That's it. There's more to it. I'm not saying that's it, but that's it that I look for a market structure shift. There's more ways you can go about on YouTube, or you may already know. Or if you want, you can ask me more questions that you might not have. But I'm pretty sure once I get done with this video, you should have a great understanding of what a market structure shift is. So with that being said, I'm gonna go ahead and do some screen back testing for you guys just for the past week. Today is Saturday, August the 10th, 2024. I'm gonna go ahead and back test from the week of the Sunday, August the 4th, up until August the 9th, which is a Friday. Alright. Now, since I said I've been trading the futures market, I am going to start there. So let me go ahead. Hopefully you guys went ahead and screenshotted this and pause the video again and rewind the video, all that good stuff. Alright. Let me get back here. Okay. So here we go. We have the Sunday Monday opening market. Alright, now some people you may see start on the daily time frame, but I mean you can, that gives you even more better bias if you want to do that. But lately with me, I'm gonna show you exactly the steps that I'm taking to actually go about this. Is that I just start from the 1 hour, for real. Because I scout, I don't really hold too much. If you want to hold, you probably want to be a little bit higher, 4 hour daily. Now I do kind of alternate through those bigger, higher time frames than the hours. I'm not going to say I'm against the higher time frames, but me and this the steps I'm taking is that I really just start on the 1 hour, really, and get down to business. So what I have mentioned is that I'm looking for the key levels. I already gave it to you, so hopefully you wrote it down or you screenshot it. So hopefully you're paying attention here. Now, as now we're always looking for the previous days. Now, when I mean that, so say Monday. I don't think I know anybody that's really trading on Sunday um, like that, really. When it comes to uh, times to trade, all right. So I did say there was a 2 a.m. So let me actually I'm gonna go about it. Let's go about it. Futures market. See, with the futures market, I really don't trade overnight. I think the only overnight that I normally trade is the Forex market. That's the only market that I really do trade overnight from 2 a.m. to 5 a.m. Futures and the stock market, like I said, doesn't do trade overnight, but the futures market does do overnight. But I really don't really mess with it. Um, for me, in that sense, but you can. So I'm gonna go ahead and go through it. So we have this line here, which is London. That's what it's called overnight, and that's from, like I said, 2 a.m. to 5 a.m. Make sure you have your time to New York. All right. So as I'm looking for a previous, so on the previous day, what I'm looking for here is just like to say, all right. So this is before Sunday, Monday. Sunday didn't really do nothing. Sunday is only opening from 6 and it closes at midnight. So you don't really have to worry about Sunday when you're coming into Monday. Monday, you're worrying about, all right, Friday. Let me take a look at Friday. Okay. Now, when I said what was the high levels, all right, so I got this high level. Looks like that was lunch. Not lunch, I'm sorry, PM. So this looks like my highest, yep, my highest point from here. My PM, my PM high right here. Okay. And this looks like my low for the morning. Okay, my low for the morning. Okay, low for the morning. Alright, so again, so looks like we came, yeah, open up. It was already low. So when it happens to come low, then that thing, I'm looking at this point, I'm looking for a buy. Again, once we take out a low or a low, then I'm looking for a what they call is a reversal. A reversal. That's all I'm looking for. I forgot to probably mention that, but again, this is something you want to write down something or rewind the video. When we take out a key time level, a high or a low, I'm looking for a reversal. So we take out a high, I'm looking for a reversal to go for a sell. Took out a low, I'm looking for a reversal to go for a buy. All right. So in this case here, took out the low, so I'm already looking for a buy. All right. So as we do that, I'm looking here real quick. Don't see anything right now. And this means here, okay. Now, 1 hour, I normally start process, like I said, 1 hour. After that, I might dabble down to 30 minutes, but let me be real, I'm gonna just take the stuff like I said, 15. So 1 hour, you're 1 hour, you're 30, you're 15, you're 5. then your 3 to 1. You'd be good. So just again follow me. Look at each time frame how I'm looking at the charts. So this time frame, like I said, I'm looking for a buy. Right. Okay. I'm seeing here what we got here. Right. So it looks like again looking for a buy. Okay, this is a key level. So we took out a low. Now it looks like a downtrend here. Don't see what I'm looking for just yet. Okay, so we're just looking, and all I'm saying I'm looking for a downtrend, then a market structure shift to go for the opposite way. Okay, down to 3 minute, nothing yet. Okay. Right, still nothing yet. Nothing yet. Alright. I do. So I saw this on the 3 minute. Let me show y'all this. There's many ways you can see this here. So I just want you to take notes. Alright. I did see this here as a market structure shift. So here, 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 here. Okay? Now therefore, if you did that, I'm looking for this to be taken out. Let me go to the one that I only use, that arrow. I'm looking for this to be taken out. So we're not looking for, so what I'm looking for in this case is a big volume, just displacement, what we call, just a big old, like, big candles, just like jumping in a pool, you're making a big old splash, like, so just boom, just like this, like, just fully, like that big old candle. See how big that candle just kind of ran through it? That gives me more insight that we want to go higher. Okay, so what I would do here in this sense here is got this low, either low, really. It could be this one here, a candle, or it could have been this one here. But the key thing from here is that we're looking at the efficiency. So remember I said the key. So we already did our steps. Steps was we took out a key level, key time level, which was the AM low of Friday morning. Took that out. So he's already trying to wait for a market structure shift in order to go for a buy. So as we did that, we waited for a market structure shift right here, which we got on. We took out this high here. Okay. Wait for a retracement to imbalance, which is an imbalance. Sorry, I didn't go over imbalance. So imbalance is, you see this high of this candle here and this low of this candle here. It's a 3 candle sequence that I'm looking for. It's this candle, this candle, this candle. So let me see something what I can do to, so that candle, that candle, and this candle. 1, 2, 3. Okay, got that? Alright. Now, you see how I take this tool right here, the little rectangle, from this high of that candle on the first candle, and I'm going over the second candle over to the third candle low. And you see how it just makes a nice little square rectangular? rectangle, and I'm just perfect. And all I'm doing is just waiting for price to come in here. And since we only have a single, this is pretty much it for me. This is why you guys see me to the point like I'm doing tools like this. I'm going for a long. I'm okay with doing this right here. Your stop loss. Stop loss. In this case, you can always put it on the low. So you got 1, 2, 3, and since this was actually just the low, so normally this candle is the low, but like in this case here, whatever the low, you just want to put it under your low. Your swing low, I mean, sorry. And the swing low is this candle here to the left is low. It's not lower. It's higher than this low here, and the candle to the right of this candle is higher than this low. So this is your swing low right here. Just like over here. The candle to the left of this is higher. The candle to the right of this is higher. Therefore, this is a low. This is your swing low. Again, candles to the left and the right is higher than this candle in the middle, making this a swing low as well. So you can put your stop loss under the swing low for this 3 candle sequence. The high of this candle here, the number 1, and the low of this candle number 3. And we draw it over the candle number 2 to make our imbalance here. And that's where we would take our entry. Any price under this candle. So look up here to this low. Here. The low in that 3rd candle is 17,603 and 0.50. So anything lower than that, once that comes in on this candle here, bam, we're still in our time from 2 a.m. This is at 2:36, so from 2 a.m. to 5 a.m. this is free game. We taking trades and we just letting it go, All right, and to help you know when to take partial, so we basically at this point we went for ideal is the low. You always want to either pay yourself to lunge. That's another thing. Pay yourself that out. Take partials at your first at the high. So this one I'm looking for is you always want to take something off, or you can just collapse your whole trade. Doesn't matter. But each level after that, and normally you kind of want to see the you can see the market structure shift on your 5 minute off, but it's almost perfect. Not perfect. I'm gonna say nothing's perfect in trading, but just give me 1 second. Good on your 3 minutes and lower. That's what I've been noticing lately. Anything under your 3 minutes up to your 1 minute is looking good. So like something like this. But here, if anybody know this, took that out. We went to our key levels though, but hit our key levels. So this is why I mean when I said inefficiency. So we didn't see anything here. We didn't see a fair value gap like we saw in the other one, right? No, but we did hit our key levels. See the 0.618. So how you do your fib is if we're going on an uptrend like this right here, I'm looking for a buy. I want to draw it from the lowest. I want to draw it from the lowest to the highest high. Just like how I did that. If I'm going for a sell, I want to draw it from the highest high to the lowest low. I wait for it to retrace. Okay? So as we did hit that key level, that's a buy. That's a buy. That is a buy. I follow the rules, right? I did follow the rules. So again, go back and watch the video, the beginning of the video. What did I say? We waited for a key time level to be taken out. Key time level was taken out. The London previous session low was taken out. Market structure shift. Here, market structure shift. Taken out. On this candle here. See how it looks? Displacement candles, big old candles just running through it. Okay, That's 2. 3, waiting for retracement to come back in to either inefficiency or imbalance, which is the gap that I showed you in the very first example, but we didn't get that here. Or I'm waiting for the key Fibonacci levels, which is anything, pretty much anything under the 0.5, because this is your discount, this is your premium. Your discount on the bottom, your premium on top. When we looking to go into, right, this is another good, and we always want price and discount. When we're looking to go into a new session, when we always looking at the previous session's highs and lows, because that's what we're looking for. The liquidity at those highs and lows. It's either that high being swept, that low being swept. You're just looking for the reversal, y'all. Okay. And this one here, this is the 2. See, when it's stuff like this, I kind of like, because I'm like, oh, that's the swing low. I like to look at the actual swing low, but in this case, I just put it on this. That's the 2 a.m. This is the high out of the 2 from the 5. So that sell sign. So what I'm doing here is just going straight to that. So we took that out. So we basically, at this point, we went for the low on the London session. So we took that out. Okay. So this one I'm looking for is a reversal. A reversal. And normally you're gonna see you can see the market structure shift on your 5-minute, but it's almost perfect. Not perfect, I'm gonna say nothing's perfect in trading, but it looks a lot good on your 3 minutes and lower. That's what I've been noticing lately. Anything under your 3 minutes up to your 1 minute is looking good. So like something like this. Boom. But here, if anybody know this, took that out. We went to our key levels though, but hit our key levels. So this is why I mean when I said inefficiency. So we didn't see anything here. We didn't see a fair value gap like we saw on the other one, right? No, but we did hit our key levels. See the 0.618. So how you do your fib is if we're going on an uptrend like this right here, I'm looking for a buy. I want to draw it from the lowest. Oops. I want to draw it from the lowest to the highest high. Just like how I did that. If I'm going for a sell, I want to draw it from the highest high to the lowest low. I wait for it to retrace. Okay. So as we did hit that key level, that's a buy. That's a buy. That is a buy. I follow the rules, right? I did follow the rules. So again, go back and watch the video, the beginning of the video. What did I say? We waited for a key time level to be taken out. Key time level was taken out. The London previous session low was taken out. Market structure shift. Here, market structure shift. Taken out. On this candle here. See how it looks? Displacement candles, big old candles just running through it. Okay, that's 2. 3, waiting for retracement to come back in to either inefficiency or imbalance, which is the gap that I showed you in the very first example, but we didn't get that here. Or I'm waiting for the key Fibonacci levels, which is anything, pretty much anything under the 0.5, because this is your discount, this is your premium. Your discount on the bottom, your premium up top. All right, and we always want price and discount so we can sell at a premium. So when we did that, so when we did that, Hold on, y'all. My bad, my bad. Sorry, sorry. Okay, my fault, y'all. Probably cut this out. This probably making it longer than what it is. But like I said, this is making more. Hopefully, this is making sense to you. But again, we got in here anything under that 50 level, which is our discount on this particular setup here, from the low to the high. Anything under the 50% is discount. Anything above the 50% is premium. So you want to get in anything under this 50, but the ideal is you want to be disciplined. This is where discipline come in. I know I caught myself sometimes. If I know if prices on the uptrend, like I'm looking for reversal, I'm like, oh yeah, we about to go up. Get in anything under the 50%. I'll sometimes get in right at the 50% or just a little bit under. I won't even wait for it to even get down here. But now, lately, just a little small rent. Sometimes I do kind of get in, like I said here, just a little bit under the 50%, any price under there. And sometimes it keeps shooting down to like down here. I'm like, oh man, you know what I do? I just add in, I just scale in, and that's okay with me. I'm okay because I trust my setups. And next thing you know, I'm down here. I got something here. I already scale, and now we off to the races. And again, you just want to up here these levels here. You just want to go ahead and just take profit at each one. At each one. After after two, this level right here, this level, this two right here, be done with the trade. I mean, you can leave a runner in. Meaning a runner is like just leave a one small position in, a risk free trade, and just let it run. It'll run a little bit, somewhat for you, but at least you don't have to worry about it though. You know what I'm saying? You put your stop loss and profit maybe up here or here, and just let it run. So yeah, that's just another bonus to add in there too for your trades. But that was a good one. Another thing I wanted to also show in this particular setup is even though we didn't see the efficiency, the imbalance, the gap that I showed in the first one, I'm pretty sure this was on the 1 minute. I'm just gonna go ahead and scale down. I'm not gonna stay too long on this second setup example, but I just wanted to see if we did see. I'm gonna show y'all what we have saw. So yeah, we did. Here, this is the high. We even took out this. Market structure should still, doesn't matter. Even if you took out this one, that one, it still left a gap. So let me take this one off. A gap. It left a gap. See? It looks just like the first example. And like I said, we're getting in anything under this third candle, which is that candle at 8:39. So we in our key time to trade. We did the steps, the first and two steps. The third steps is all we're waiting for. And we got that here on either the 2 minute or 1 minute. That's how this trading, this strategy, these steps, the rules is implied. It's like if you follow, you will be rewarded. I doubt that you won't be, unprofitable, but I guarantee believe that you would be happy with the results on this if you just take the steps, be patient, and discipline. That's all. Okay. Let me go ahead and again just go back up to the one. I will see where we at right now. So whew, I'm already at an hour. I'm probably gonna make these videos a lot shorter. I just wanted to give y'all like a little introduction. This is probably gonna be like an introduction video. How to do this, and I'll probably just start doing small little examples to show you. So we got the introduction video out the way. Let me see. I'm gonna do like two more examples here. Okay, so that was Monday. So off of Monday, we got two good trades. Normally, if you put on a nice good risk of trades, you pretty much don't probably have to trade. Some people don't even trade. Like once they get their goal, have a goal. I would say, don't be out trading every day. Don't, don't, don't be out trading every day. All right. So okay. So now that we have another trade, what's the next one? Anybody remember what the next one trade was? The time to trade. Next time to trade is 1:30, 1:30 to 4. It's not gonna let me do it on the 1:30, but you get the drift. Um, and we're looking for drop down here just a little bit more. Let me get rid of this old ones here. And what I'm looking for here as we go in here, so we're looking for, let's see if we have lunch. So it looks like the lunch high was here. Looks like the lunch low was there. Okay, let's see here. AM. Okay, no lunch. Alright. Okay, 1:30. Let me just put this over a little bit more. Put this here. Lunch. Alright, so looks like we got here. As we can already kind of see, you see this here? Like, this is how I can tell. Like, I'm like, oh, look, I'm looking for a buy. You know what I'm saying? Because this right here on a 15-minute, you'll see some, your eyes will start to look at stuff. You'll be like, bam, bam, bam. And, you're just saying, like, bam, bam. And you're just like, man, I'm just waiting for it to actually just take out this. Why, you see the balance right here. Why nothing came down here? And it's like, actually, it did, though. I don't know if y'all pause the video and see if y'all see what I see before I let it go. I'm gonna give y'all like a couple, just a second here to look at it real quick. I did the bears market right here. This is a bear market. So I have what? Bam, 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 and we have the bam right here. I left a gap right here. Right? Left a gap. I'm gonna give y'all this, but that's it. We broke this. It's a market structure shift. What we waiting for? It didn't come in though. It didn't give us a let me change this real quick. This is the PM, sorry. PM, y'all. That's the PM session. Afternoon, 1:30 to 4 p.m. real quick. But what do we see, yo? What do we see where we could have got in at? We didn't patience and discipline, right? Follow your rules. We didn't see where we could have got in at. So we couldn't get a trade in right now, as you see on the 15-minute. But if somebody that just want to stick with a 15-minute and maybe anything on the 15 minutes or 5 minute at least under the 5 minutes, like, man, that's scary to even trade anything under the 5 minute. I thought the same thing. But this is what I saw. Key levels. Key levels on the Fibonacci. I did it from the lowest low to the high. Could even bent right here. Okay. What we see? What happened here? Came into this level. And what else? A gap. A gap, y'all. A gap right here. inefficiency and also imbalance, which I told y'all. One candle, two candle, number three candle. One, two, three candle. Draw your rectangle. There you go. And bam. Okay. And it even came in at 5. So we could have got in at 5, which is still a good time to trade. See, so here's the next little session right here on Tuesday. You probably would have been in it for a minute, but and your stop loss again. Always under here. And your first take profit is you could like since we above the 50, here's another thing that I should take consider. Anything say you got in here in this candle, it's okay to take your partials here because you're above the premium. So we could basically see how we took out this right here, this high. We in the premium. So anytime we take out a high or a low in the premium, in this case we took out a high in the premium, which is above because we got in at a discount and we want to sell in a premium. So as we are above the discount 50% level on the Fibonacci, we took out a high, we can almost technically look for a price to also retrace a little bit more and maybe just get more chance to give us more discounted price and go back up. In this case, got back in at another time, which is what I say here is 8:30. Okay, and that's like that too. Like so, we got your London. Let me make sure so y'all here. No, some of y'all so y'all can get in the habit. London is that 2 a.m. to 5 a.m. Okay, and this right here is a.m. Okay. So we got that right. We have that. But that was just a bonus right there. But I'm gonna get to what I was. Let's strip this down here. That was just a bonus here. So I'm gonna delete all this quick. That was just a bonus that you can use in a sense. But let's see if we could actually got a chance to actually trade in this Monday session on the August the 5th. All right. So in the 15 minute, we see that we are looking for a market structure shift to buy. I know this is hindsight. Meaning that I'm just like probably thinking I'm just putting stuff in like, oh man, you just really just looking at it, bro. You just trying to put, nah, man, nah. I wish someone like that. But nah, man, this is really just sometimes sauce, man. And also 11, what I said, to 12, 12, 12, 12, 12 right here. So this is also another previous session here. So previous session from why the AM? Why have this 7 to 11? Let's put 7, like I said, 7 to 11 that we trade in, but we also want to look at the times, the key time level. So the key time level here to look at is from here to 12. So that was 9 to 12. So from 9 to 12, I got my high here. See, once you get in the habit of actually like, man, all right, I'm just looking for the previous session high or low to be taken out. That's it. All right, so as we get into 130, you just like, all right, I'm looking for the previous high or low to be taken out. Okay, cool. Took that out, all right? Okay, we don't trade from 1 to 12 to 1. So that's off rip, no go. All right. In this case here, we can see something like this now. There's two ways to just gotta see this stuff. I'm gonna try to not complicate this. Now that you back testing this, you just gonna have to go with back testing. From what you learn here, just back test. You're probably gonna see too many different ways you can see. And I'm seeing that right now. I'm actually experiencing that. That's why I'm like, oh man, you could have did a few other ways. Like here's the market structure shift like here. Like you see that, right? That was on the $15 draw. But check this out, right? And this still my setup here. We took out this here, all right? We already came down and took out the lunch low here. This was the lunch high here, and this was the previous session high. So here I'm like, oh man, kind of want to go ahead and get in a sell right now. You know what I'm saying? And this right here starts our 130. So say we did go here, we went above, and look, it came on a setup here. But let's see if here. Let's see one thing here. Let's see if we would strip down this to 3. Nope, no imbalance. Okay, let me see. Where I'm at. Okay, 1 second. Where am I at? London AM lunch 5. Okay, here we go. Okay, let's see. It's right here. Ain't nothing. I mean, technically, that's still a gap, so we can always trade back into that gap and take that here. That's something here you can always do. See how it still respected that gap. The gap still hold up, so that's okay. But that's not our setup here. That was just a little extra to go into about. Let me see here. 1 second. 1 hour. 1 hour. Okay, 1 hour. Okay, so man, that's horrible. Something just like that. Alright. Well, I know what I did see. And again here. So even like here, and you can do this on this. Like this is still in our time for the PM session. There's a lot of opportunities, I'll tell you that. But I'm gonna show you this one right here. You just have to look for the structure. So we have this right here, right? We got this low. See, that's a swing low. Remember, swing low. The lowest, the candle to the left is higher than this middle candle. Candle to the right is higher than this low. So it's a swing low. Looking for your swing high, which is these candles to the left, this candle to the right. It's not higher than this candle in the middle. Okay. Then this is our lower low right here. Okay. You took out this low here. This was a swing low too, but it took out this low, so I'm putting this on this low right here. So let me do that. Hold on, let me do that again real quick. You see, this is a swing low too, right? Because this candle to the left, this candle to the right. Okay, hold on, let me show you real quick. This candle right here to the left, this candle right here to the candle to the left and the candle to the right is not lower than this candle to the middle. But here, this candle right here took out this low. So this is the swing low I'm looking at. But then again, on this, we didn't have no type of balance, or it wasn't even no strong. Like, I'm looking for this type of strong. Like, see how it just dropped down? Big old candle below a low, which is going to be all these lows here. Left our little gap right here, which I'm going to get to. That's pretty much our entry right there. So, go back. So here, this low, that high, that low, that high. Bam, okay? So now, I'm looking for this to be taken out. Okay, which is this right here. I'm looking for this candle, which is the last one before we took out this high. So now I'm looking for this in order to be a market structure shift. Drop here, get a little gap, entry. Now this setup, this particular example might be confusing, so if y'all have more questions, you'll probably see more examples. Like I said, this is just an introduction video. You will see more In this case, you when we're looking at stuff like this, you're like, okay, what do I get out? How do you do your targets? When you're in stuff like this, you want to go ahead and like just target for lows like this, lows like this. Sometimes you can do like in this example, and I'm gonna show you multiple examples. Like here, if you're looking like this, you just want to grab probably the lowest, this lowest low here, or the candle's low up here. You see how we pretty much what was probably shouldn't have been. Or sometimes you just like in an example here, you wanna back out a little bit more, but still, we was in a this probably wouldn't have been ideal. That's why we kind of didn't really go too much, but I will go more in depth with that on how to actually set your target profits and the more the reason behind it in that sense. But I'm gonna go ahead and let this be the third example for this video, just for the introduction. So just rewind it back to the very beginning to get the rules, the times to trade, time key levels to look for, in order for looking for a reversal. But I think if you guys really take your time, maybe have to rewatch this video again, do back testing on your own, and I think you will have some good results coming your way. So thanks for tuning in. And if you know, you know the vibes. Peace.